Please, your name. Who answered the question?
Speaker.
Yeah, Sika. Oh, okay. So thank you very much. Sika was saying that her observation when she gets to a marketplace is that people are buying and people are selling. Okay. So basically that's all about trading. Trading in general. Okay. It's an action or an activity of buying and selling of goods and services. Okay. Yeah. So when you get to the marketplace, you see people, selling all sort of things, and you see people also buying all sort of things. Okay. So literally, that concept also works with Forex trading. Okay. That concept also works with Forex trading. Yeah, so when we say, just a second, please. Good. So that concept, as I was saying, it works with Forex trading. Okay. Yeah. So we are going to use that same theories in, buying and selling in market to understand how Forex works in the global, or on the global level. Okay. Yeah. So when we say Forex trading, what do you understand? Like, can anyone, maybe you've heard Forex trading. Can anyone say anything about Forex trading to me? Like, you can unmute yourself and speak up to me. If you have anything to say about Forex trading, what have you heard about Forex trading? Or what do you know about Forex trading? Anyone who wants to try Forex trading? I'm sure you've heard it before, but what comes to mind when you hear Forex trading? I just want to know what comes into mind when you hear of Forex trading.
Forex trading has to do with the buying and selling of currencies.
Okay, okay,
Yeah.
very good, very good. So Gershon, thank you very much for that feedback. Exactly as you said, Forex trading it means foreign exchange, okay? And it's, involves the buying and selling of currencies, as you said, okay? Yeah. For example, if you believe the US dollar will strengthen against the Ghana cedi, you can what? You can buy the US dollar, okay, now, and sell it later when it's worth more, okay? And the difference becomes what? Your profit. Okay, I hope you understand what I'm talking about.
Yes, please.
Great, great. Okay, so Forex trading is done globally and it's the largest, market in the world, which, trillions of dollars are being traded on a daily basis. Okay, so if you look at my screen, you can see some images down there. Just to show you the kind of activities that goes on, that's on my left. You can see some of the activities that go into, the Forex trading market, okay? Yeah, so these are some of the activities that circulates trillions of dollars in the market space, okay? Then on my right, you see another picture there, okay? And that's more technical, but I brought it into the slides for you to, just have a look. And then when we start going into the charts, you'll definitely be seeing more of that. So kindly take a look at that, because we'll be seeing more of that when we get to, the technical part of Forex trading. Yeah, so with that being said, I would like to move on to the next slide. Okay, so when we talk about Forex trading, it didn't just, Forex trading didn't just come out of a blue, okay? Forex trading started from somewhere and it got to this very stage, okay? Yeah, so briefly, we want to look at some historical events, okay? That came up till this very day, okay, in the whole Forex trading historical, events. Okay, yeah. So long ago, only large banks, okay, government and wealthy investors could participate in forex trading. So it was more or less like a high-class club. Okay, yes. But eventually, the introduction of computers, the internet in the 1990s, to date, paved way for people like you and I to also involve ourselves in this kind of trading activity. Okay, yeah, but back, some years back, it wasn't like that. Okay. So we want to look at some notable events that happened, and one of them is a barter system in the 6000 BC. Okay, the earliest form of exchange were goods traded directly, okay, through this barter system. Okay, so goods and service, or yeah, goods, let me put that way, were traded with a barter system. That was about 6000 BC. Then gradually there was introduction of gold coins in the 6th century. There was introduction of gold coins, but even with that one, if you've seen a gold bar before, the gold bar is very big and it's, let's say, heavy to carry and all that. So it created certain inconveniences. Okay, so that era of buying gold coins also, passed, and we had an era called the gold standard in the 1800s. Okay, where countries adapted gold standard, where paper money could redeem, you can use your paper money to redeem, your gold and all those stuff. Okay, and this system also collapsed during the World War. Okay, when government started to print money. Okay, then after that system of gold standard, we in the forex space, there was also another system that came, and it was called the Bretton Woods system. Okay, and this system came up after the World War II. The US, UK, France established the Bretton Woods Agreement, okay, pegging foreign currencies to the US dollar, which was backed by gold, okay. But even with this system, as time went on, it also collapsed, okay, because there are insufficient gold reserves, okay. Then there was another system that was introduced, or another agreement, or let's say another event called the Smithsonian Smithsonian Agreement. Sorry, Smithsonian Agreement. Okay, and even with that one, that was somewhere 1971. It also didn't last that long. And then there was another system called the Plaza Accord in 1985. Okay, and that was also between the G5 nations. Okay, when we say G5 nations, they include the US, the UK, France, West Germany, Japan. They agreed to devalue the US dollar, okay, by trading against it. Okay, then eventually there was the introduction of euro in 1992. Okay, yes, so euro also had its era. Then fast forwarding to the 1990s, we had what we call technological advancements, and that was the rise of the internet, globalization, revolution of forex trading also, took another turn. Okay, yes. Then to present day, we have the forex market, okay, which is now, as I said earlier on, the largest market with over $6 trillion being traded daily. Okay, yes, and these are some notable events that happened, during, or some historic events that happened before Forex got to this, I think we're in the 22nd century. Okay, yeah, so we are no longer in the 21st century, we are in the 22nd century. So where Forex has gotten to, events like that had to take place. So this very day, you can just take your phone and trade as if you have, mobile money. You see how you can easily send mobile money and all that. Yes, that's how now Forex has become very accessible to anybody. Okay, please, I hope you understand what I'm talking about now. Yeah, so with that being said, yes, as I was saying, so the summary of it all is what the history of retail or FX trading is a colorful and exciting tale filled with technological leaps, increasing accessibility, and ever watchful regulatory guidance. Okay, as technology continues to advance and regulations adapt, the future of retail Forex trading promises to be even more fun and accessible for traders around the world. Okay, so literally Forex trading started from somewhere and it has evolved with time. And now it's easily accessible to anybody in any part of the world. Okay, so with that being said, would like to move on to our next slide. What can be traded? Okay, so initially we're talking about currencies. Gershon mentioned currencies. Okay, yeah, but Forex trading is not all about trading currencies. Okay, there are other instruments or derivatives that can be traded. Okay, apart from the Forex, or apart from is someone saying something? Okay, so apart from currencies, there are other instruments and derivatives that can be what traded. And number one here, we have commodities. When we say commodities, we have gold, crude oil. I'm sure you've heard of crude oil, you've heard of gold. Okay, yes, these are some commodities that can be traded. There are other more commodities that can be traded on or in the markets. Okay, we also have commodities like silver, platinum, natural gas, and coal. These are all commodities that can be traded. Okay, then we talk about number two, stock. Okay, stock basically is a share of ownership of a company. Okay, and we have stocks. When we say stocks, as I said, it's a share of ownership of a company. So we have companies, examples like Coca-Cola, Netflix, Tesla, Amazon, and so on and so forth. These companies are also on the Forex markets, and you can trade them. Okay, then we have stock indices as number three. Okay, stock indices can also be traded. Okay, but when I say stock indices, it means groups. These are groups of companies. Okay, and an example is the Dow Jones or the US 30. Okay, and we have the S&P 500. That's the Standard & Poor 500. Okay, these are group of companies that come together, as one entity that you can even trade on the market. Okay, then after that we have cryptocurrency. Yes, so cryptocurrencies can also be traded. I don't even need to talk too much about cryptocurrency, because when I say cryptocurrency, if I should give you an opportunity to speak, I'm sure, yes, people will have something to say about cryptocurrency. So who wants to say something about cryptocurrency? Who wants to say, or when you hear cryptocurrency, I'm sure there's a particular word that comes to mind. So please, who can unmute himself or herself and kindly
Bitcoin.
share with us? Great, exactly what I was expecting. Okay, when you hear cryptocurrency anywhere, okay, the very first thing that comes into people's mind is what? Bitcoin. Yeah, because it's, yes, the most popular, part of cryptocurrencies, but there are other ones like Ethereum, Ripple, Litecoin and co, Dogecoin, and so many others. Okay, yes. So we also
Dogecoin.
have the Dogecoin. Someone said that too. Great. Yes. So these are all cryptocurrencies. Then we look at the ETF, exchange traded funds. Okay, these are also collection of investments such as equities and bonds. Okay, yes. So with that being said, we'll also like to move on to the next. Yes, on what can be traded. We have what? Futures contracts. And when we say futures contracts, okay, futures contract is an agreement to buy or sell something like gold, oil, or any currency at a set price on a specific date in the future. Okay, yeah. So a real life example too can be a farmer in somewhere the northern region. Let's use an example, Tamale, a farmer in Tamale who expects to harvest maize in about 3 months' time. Okay, and you are worried about price might drop. The maize price might drop. So you want to protect yourself. So you agree with a buyer that, oh, okay, I'm going to sell my maize at, what's the name? 100 cedis per sack, okay? Regardless of the price in 3 months' time, you are still going to sell your maize at 100 Ghana cedis. So if maize at that 3 months' time, the sack of maize is 80 cedis, okay? So literally you are safe because you are making a profit of 20 Ghana cedis. But let's say if the price of the sack of maize is 120 cedis, then you, the farmer, you're actually going to make a loss of 20 Ghana cedis because you agreed that in 3 months' time, you are going to, give the buyer the price as what? 100 Ghana cedis. So that's what has to do with futures. Then we have next, we have the CFDs. That's a contract for difference. And a CFD is a contract where you don't own the assets, but you can make money by predicting the price of, the asset, whether it's going to go up or it's going to go down. Okay, yes. So that's what mainly we do on the Forex market. We actually predict or speculate prices, whether it's going to go up or down, but we don't actually own it. We don't own gold. We don't own euro dollar, but we speculate, okay, that this is where price is going to go. Okay, yeah. So with that being said, we look at options. Okay, yeah. So options gives you the rights. Option gives you the right, but not the obligation to buy or sell something as a set price before a specific date. Okay, yeah. So that's also with options. Okay, yes. Then we'll quickly like to move, okay, to the next part. Okay, but before I even move to the next part of tonight's session, does anyone have anything to say? Any question yet? Yes, I know we have the Q&A at the end, but briefly, if anyone has anything to say or you want to get clarity on something, I just want to give a minute or two for that. Anybody like that? Okay, great. If no one wants to speak, then let's look at fund management. So what is fund management? Fund management refers to professionally managing investments on behalf of individuals, institutions, or organizations. It involves strategic decision-making to achieve specific financial goals, such as capital growth, income generation, or risk mitigation, depending on the investor's objectives. Okay, yeah. So with that being said, we would like to still,
Okay.
yeah, we would still like
Good
to,
evening, guys.
yeah, good evening.
Okay.
Want to still see fund management as, just a second, please. Yeah, we want to see fund management as you managing, yourself, okay? Managing, yes, managing, let's say everyone belongs to a house, okay? So you trying to manage yourself at home. Maybe some of you stay alone, okay? So you want to manage everything, maybe your fees, your rent, your food, your these are things that have to be managed. Okay, yeah. So we can take fund management on that direction. You trying to manage, things that have to do with your finances. Okay, then quickly would like to look at some key aspects of fund management. Osaje,
Hello, sorry, we cannot hear you.
can you hear me?
Yeah, we can hear you now.
Oh, okay. Okay, you can hear me now. Okay, great. Yeah, so
Okay, you want me to touch on the key aspect of fund management?
just a second, please. Okay, so Osadefu, just touch on it whilst.
Okay,
Oh, okay.
all right.
Should I take it?
Good evening, guys. So let me briefly talk about the key aspects of fund management. Yeah. So this time we are going to take it to be very practical. Yeah. So I'm sure you all understand what this boot camp is about. As we've already had it in our this one boot camp title, which is the Fund Mastery Boot Camp. We are here to um, guide you guys to manage funds. So when you are talking of fund management, people look at it from the institutional point of view. But fund management isn't about institutions alone. You as a person also have that flexibility. You also have that opportunity to manage funds for yourself and even for others. You get it? Because the skill we are going to equip you guys with will help you be able to take on that role as a person. You get it right. So let's quickly run through the key aspects. So one of them is asset allocation. So with the asset allocation, it's all about you choosing what to trade. I mean, so let me see. Since we are talking about forex, yeah, forex. Let me not even limit it to forex. When we talk of CFD trading is a derivative. So this derivative, it allows you to speculate on price movements of this one prices have been pegged, like they've been pegged to an asset class. You get it? So if it's this one the price of gold, you are just speculating on its price. You don't have to own gold in order to trade it. When it comes to CFDs, it's just an agreement. Yeah. So imagine you have been allocated with funds, like let me say 1K, 2K, and you've been tasked to manage this fund in a period of, let's say, 12 months. Yeah. So within that 12 months, you can't, because CFD is general, like there's crypto, there's stocks, there's currencies, a whole lot of things. You get it? You can't trade all of these stuff simultaneously. So that's when what asset allocation comes to play. You then ask yourself, okay, where's my strength? Which of these assets can I leverage more on in order to what let me say, God, yeah, which of these assets can I leverage more on in order to make use of these funds? You get it? So that's when you tell yourself, okay, maybe I'm good at trading currencies, or you can even say that currencies are less volatile as compared to crypto. You get it? So you'd be like, since I'm a conservative trader, let me just take on currencies alone. You get it? Or let me just take on commodities, or let me just tackle both currencies and commodities at the same time. So that will have you trading both GBP, USD, or even gold. You get it? Yeah. And we also talk of portfolio construction. So when we talk of portfolio construction, I think even on this topic here, we talked about it yesterday when we had Mimi on the call. So portfolio construction means, so simply, it's
Yes.
just trying to, let me mute. All right, stay on. Okay, thank you. Yeah. So when we talk of portfolio construction, That's simply you not putting all of your eggs into one basket. You get it? So let me say asset allocation is so synonymous to portfolio construction, because in portfolio construction, you also will get to determine what you are going to trade and what you are not going to trade. You get it? Yeah. So it may be like, okay, since CFDs is giving me the opportunity to buy and sell simultaneously, then I can choose to go hedging. You get it? So hedging is a risk management tool. You get it? Like it's a risk management tool. Or let me say it's a strategy where, let me say, you take two correlating assets. They can correlate negatively. So let me say two negatively correlating assets. So we can take something like stocks and gold. So generally, gold is referred to as a safe haven. You get it? So this simply means that whenever stocks are falling, gold tends to this one rise. You get it? Because when there's moments of tension, wars, like uncertainties and stuff, people rush to gold in order to what, put all of their investment into gold in order to hedge. Like they just want to hedge their investment against anything that might lead to a crash of the stock market. You get it? So that's when the portfolio construction comes in. So you'll be like, okay, since I'm quite conservative, let me just try and hedge this my stock portfolio against a good portfolio. You get it? So you can buy good and let me say stock simultaneously. So let me say when we had the Russia-Ukraine war, we had most stocks falling, but then we had there's some good performing very well. You get it? Yes. So that's portfolio construction. Then we also have risk management. When it comes to fund management, risk management is very, very key. You get it? So from day one, we've been talking about risk management. And when you talk
Yeah.
of risk management, that's you playing it safe, not playing it safe, like necessarily, but then mitigating your losses. You get it? Like trading, whatever venture that you get yourself into is risky on default. You get it? Even childbirth, you get it, Charlie. Our mothers, they don't even know what may happen if they get what the pregnancy ward or whatever. You get it, but yet still they feel strong to go. You get it, and the fact that that pregnancy might not turn out doesn't mean that what one must not give birth. That's the same for trading as well. The fact that you can blow an account, the fact that you can lose money does not mean that what you must not trade, you must not take on that risk. You get it. Every risk is worth taking, but it's just a matter of what mitigating your losses, like putting in the right measures in order to what still come out successful, even if what things go south. You get it right? Yeah, and we also have performance monitoring and reporting. So when you talk of
Yeah.
performance monitoring and reporting, there's fund management. If I've given you 1K to trade for me, I can't be left in the dark. You get it? You need to be reporting to me. Okay, 1K. Today I made what 10% of your 1K. You get it? So you need to let me see that. And because of stuff like this, that's what 8 Wonder came into being. Like we made 8 Wonder specifically for what performance tracking. You get it? So as a trader, you get to know your flaws. You get to know what you are doing wrong, and you also get to know what your strengths in order to like hone more on those aspects in order to become a better trader. Yeah, yeah. So that's why we came up with 8 Wonder. So with a platform like 8 Wonder, you just have to what link your trading account to our platform. So let me see, I've given you 1,000 US dollars. You've deposited that 1,000 US dollars into your trading account. Now for performance monitoring and reporting, it's just a matter of you what linking that your account to what the 8 Wonder platform and giving your investor this one access to it. So you get it. So with this one, there's no need for you to send a WhatsApp or an email to the person that, oh, what's the name? This week we've been able to make X return on this investment. You get it. So with our system, you seamlessly get to show the investor what's really going on, what's his money is being put into. You get it? Yeah. So that's for performance monitoring and reporting. So let's talk about adherence to investment strategies. So since day one, since you guys joined our Telegram community, because that's where we all started from. Yeah. So from the Telegram community, I always keep on saying that what discipline is key when it comes to trading. And when we are talking of discipline, what really affects traders is psychology. Yeah. So psychology is like we are human beings here. Most of us get moved by money, especially seeing your money run into losses. You get it. But trading is all about numbers. It's just a matter of what knowing the how do you call it, the numbers of your strategy. You get it. You must know your strategy's win rate. You must know your average risk to reward. When you have all of this, like at when you have all of this at your fingertips, trading becomes way easier for you. You get it. And this is also one of the reasons why what we also came up with 8 wonder, because with 8 wonder, for instance, yeah, as you are trading, our system gets to what read like it. Your data is being assessed through our platform. You get it. So our AI trading coach gets to know your win rate and all of this, and it gets to what advise you on what you can do to keep up with that win rate or even get a better win rate. You get it. So I will take this scenario.